This is Brent with Trade Therapy. Welcome back to the Trading Couch. This is your clarity overview for last week. The market is pacing a mature, advanced healthcare is back at its base, and United Healthcare, which was our clarity spotlight last week, really sits at the hinge. We trade structure, not headlines. We've talked a lot this week about how wealth is really built through consolidation and then protected by diversification. That was our common theme as we conducted our top-down analysis that started with SPY. This is a SPY weekly chart. From the last time we covered SPY back in July of this year, we had noted at the time that we were running up into the range of a fib cluster here, and we should expect potential resistance. Talked about the maturity of this impulsive wave structure right here and the inefficiencies left behind within the structure itself. We thought that we didn't see any reason for any distribution or any sort of serious downside risk at the time. We thought there may be a slight additional upside, which we did get, but we are running into that range where profit is being taken coming out of this impulsive wave structure. We can see that there was rising volume into these smaller body candles, and that's usually a tell that institutions are dumping. We then saw a high volume candle coming into the downside. So profits being taken here. It's really not that surprising. The defense level, the floor that we're tracking in our trades is 613. Anything that can extend above this supply line right here is where what we'll be looking for from a continuation standpoint. We don't see distribution here. We see basically exposure management inside a mature campaign. We do see extension away from the 200 weekly exponential moving average. Anytime we see extensions away from the 200, we do need to be on our toes for some sort of a profit-taking a scenario to play out. We then took a look at XLV, healthcare in general. This is where we left off the last time we looked at the healthcare sector, which was back in November of last year. We had identified this three hills and a mountain setup, candlestick formation that has been historically present within healthcare. We were looking for the backside of the mountain move back down to this reaccumulation base right here. You can see the large volume profile there. We identified profit taking here at the top. So we were looking for additional downside, which we got. If we look at the updated now August of this year XLV chart, we do see that extension down the backside of the mountain, higher volume indicating accumulation at this support level is not surprising at all. There's no clear spring yet. There has not been a clear undercut of this level yet. So we're watching for that to see if we see a Wyckoff spring develop underneath or at least testing this low right here. So if we see a development like that, we'll be looking for entries in other areas of the healthcare sector, including Eli Lilly, which was part of our top-down analysis. You can see that profit is being taken on this higher degree Fibonacci extension from the larger base. We can see high levels of volume coming down and testing the 200 weekly exponential moving average in Lilly. We talked about what the challenges all of the charts face within healthcare. We talked a lot about the strategy behind these moves, these big gap downs as it's coming up and approaching what is now falling exponential moving averages. We also took a look at Pfizer, which we haven't looked at since November of last year. And in November, we discussed in our spotlight on Pfizer that there was a potential for additional downside here. This looks like redistribution. We expected to see downside within Pfizer. We got trolled because of it, but we did see downside develop here. Question is, will we see some sort of accumulation structure develop right here? Is this going to be the bottom, or will there be a spring develop later? If we see that downside in XLV develop, we should expect to see spring or really good entries in these individual charts, including some of the ones that have just really been beaten up. We did take a look at TDOC in what seems to be a distribution campaign that is never ending. We looked at it and said, okay, is this going to be the spring here, or should we expect another low A Wyckoff spring set below this entire range, setting the final bottom within TDOC. We're going to be keeping an eye on that. We talked about strategies and triggers on how to identify that. Finally, United Healthcare has fallen through the ice here. You see that United Healthcare does have a history of going through distribution and then a dramatic drop down here. We talked about how Wall Street uses headlines to create these big dramatic moves and how that affords them the opportunity to take advantage of the sudden, extremely bearish headlines that are running about really the cash cow or the cash core of the healthcare sector, which is the insurance leader, United Healthcare. We talked about this volume here. We talked about the strategy behind using these headlines to gain an advantage on the market. We talked about how Wall Street is very good at sneaking up on people. You can see low volume across this distribution phase that has been in place since late 2023, mid 2022 years when they started taking their profits. And now when they're ready to reacquire their position at much lower prices, suddenly we have this extremely negative campaign that has played out in the markets that everyone is watching and waiting for the next development. We talked about the cycle for United Healthcare. We do expect there to be some accumulation. We do see two very different paths moving forward for United Healthcare that we went into a great amount of detail on. And what triggers to look out for? There are falling moving averages here. You see, we've got a green box highlighted right here for a reason. There is negative divergence in place. We do expect to see some form of accumulation structure building at this volume profile here. This is consistent across the entire healthcare sector. There is additional downside risk, but we don't see further distribution from these levels. We do see opportunities opening up as Wall Street positions themselves in the healthcare sector for the next uptrend. If you're interested in our trade details, interested in learning more about institutions and how they position in the markets and take advantage of headline-driven volatility, read Clarity. There'll be a coupon up in a minute. That's all the time we've got this week. We'll see you next week.